the crisis unfolding in the global arena. We've got the Greek tragedy, as my media colleagues are referring to it as, and we've also got the Dubai crisis that appears not to be contained. What do you make of the entire situation and the fact that it is going to impact emerging markets like South Africa negatively?
Yeah, I think it is a bad week for emerging markets at the moment, and those numbers coming out of Dubai, and with Nakheel, I think you pronounce it that way, with the 3 billion debt write-down that they need to do there, and also Greece being downgraded to BBB+, not very good for our markets, especially turns a negative eye to emerging markets, turns a negative eye to our governments, and what really the kind of debts and exposures that they have through their business and their dealings. So not really a good outlook for us.
And Warwick, we're also looking at rating agencies suggesting that the UK and the US could be downgraded as well. Having spoken earlier to Steve Bryce from Standard Chartered, he did say that that would wreak havoc on markets globally.
Absolutely, definitely.
I must say, in recent times, I've lost respect for some of the prescient abilities of debt rating agencies. But nevertheless, the likes of Ireland and Greece are at the thin end of a wedge that is worrying. But I think I must point out that the difference between Dubai and a sovereign default is that perhaps the Dubai World Company is a lot like Fannie Mae, Freddie Mac, that the US government basically came in to rescue. So effectively the expectation was that you would have a sovereign standing behind that company, and effectively we now have a situation that the market's uncertain if they're just going to wash their hands and walk away. There is a subtle difference here, and it is quite important.
In Ntombenhle, are we on the verge of a double dip recession in your opinion?
I think what we've seen from the market lately is that what the fundamentals are telling us is that yes, we should potentially see a double dip recession, but it seems that traders are looking for momentum from other sources, as we saw with the data that came out today. When it initially came out, the market went down and then went back up again. Yes, it closed down after the United States opened, but the traders weren't looking much at the fundamentals and the economics governing the country. But so it's anybody's guess whether we will have a double dip, but fundamentally we should.
Just before you joined us, I was speaking to Warwick about the story on Fin24, and that is that ABSA may have to write off almost 1 billion rand worth of bad investments. That's what's being estimated by analysts. Let's look at the financial sector. ABSA today closing at just over that 120 rand level. Do you think we're going to see more pressure on ABSA? I did put this question to Warwick a little earlier.
I don't believe so. I think that's already been put into the price. Maria Ramos came out a few months ago speaking about the possible write-downs at ABSA, but I think the banking sector in general is a little bit sensitive at the moment, while we wait for consumers to come back into the market and for the effect of the 5% we've seen since December 2008, 5% interest rate cuts to take effect. So for the moment, I think everything is already in the price. Just what we saw was just a reaction from people, maybe the late traders, into that price. But I don't think going forward it's going to adversely affect them that much.
How do you feel about the banks in South Africa, given the skittishness around international banks, with HSBC now coming into the spotlight with their exposure to that 26 billion rand in Dubai?
I think in terms of solvency, I certainly have no issues at all. I think our banks are as healthy as ever. In terms of earnings, yes, I think they'll take a bit of stick, and in fact already have, but it'll probably be a case of starting to form the bottom now with those key lending items such as car sales starting to bottom out, and also the first positive property index number we've seen, ABSA's property index, looking positive a couple of days ago. So it's not all bad for the banks.
But Warwick, have the share prices factored in all this relatively good news then?
I would say, given the low base they came off from last year, yes, they probably have. I mean, those prices have run quite well considering their negative earnings outlook.
In Ntombenhle, with that, the negative earnings outlook for the banks, the prices have run relatively well. Do you see value in a bank like Standard Bank, which closed today at around about that 98 rand level?
Yes, I think there is some value in Standard Bank. I mean, the whole Angola business that's going to be up and running next year, and I think market liking it quite a lot. I mean, Standard Bank is one of the star performers at the moment in the banking sector. They have a strong presence in emerging markets. They have a good model that seems to be working. They're very quick to act, and they have built up quite a presence in Africa. So I think there is potential there and more opportunities there. But as I said earlier, we just need to wait for the 5% decreases in rates that we've been given this year to start taking effect, whether that's going to be in 6 months' time or 12 months' time. But we need to wait for that before we can see proper performance coming out of the banks.
But shouldn't you buy the banks now in anticipation of that proper performance?
I think there are some opportunities, such as in Standard Bank, Nedbank, and perhaps ABSA after this whole write-down news gets digested into the market. So I think there is opportunity there, but I mean, if anything, I would say maybe your defensive stocks are where investors should be looking at the moment, such as SAB, BAT, MTN, Shoprite. I think they haven't rallied as much as the other stocks have, and they tend to be more defensive should we see a double-dip recession that we were speaking about earlier. So I think that's more where investors should be looking and shopping around in the industrials for stocks that are far more defensive.
Warwick, would you be shopping around in the industrials? A stock like MTN coming back to 110 Rand today. It's down nearly 4%. Is this a buying opportunity on the likes of an MTN?
Yeah, it would have its attractions, yeah. I mean, the most important thing that's happening in industrials right now is that the input costs, such as commodity inputs, energy inputs, and so on, I mean, I'm talking on a global level now, are actually down, and it gives them a chance, despite recessionary environment, to improve their margins.
Very quickly, Old Mutual, a quick comment out of you both. In Ntombenhle, start with you. We're down almost 6% on Old Mutual at the bottom of the top 40 at 12 Rand 91. Any particular news flow around this stock?
I'm not sure of any particular news flows that I've heard of today, but I think what we're seeing with these life companies is that consumers, because they're also very consumer related, where people are actually not spending or not buying any more policies and using their discretionary income to survive actually. So I think that's what their business is suffering from, and also some of their hedging positions, their exposures internationally, perhaps not working their way. But so further news than that, I'm not sure. I haven't heard anything.
Anything on your side, Warwick, on Old Mutual?
I thought I saw a SENS announcement, but I didn't follow on it, sorry.